All right, let's dive into the wild world of day trading. It's a topic that's got so much hype and, let's be honest, a lot of high stakes. But what does it really take to make it work? We're going to cut through all that noise and get right down to the basics.
So this is the big question, right? It's the one everyone asks. Can you really jump into the market in the morning and be done with a profit just a few hours later? It sounds amazing for sure, but is it actually realistic? Let's find out what it really takes.
Okay, so the most important part of this whole thing is right here in the definition. Day traders are not investors. They're not holding stocks for weeks or months. Nope. They are in and out within the same day. All they care about are those little price wiggles that happen minute to minute.
So to really get a handle on this, let's zoom way in. What's a day in the life actually look like? In this first part, we're going to break down what a trader is trying to do between that opening bell and the closing one.
This is probably the most crucial thing to understand. Successful day trading is not about getting lucky. It's not pulling a slot machine lever. It's a skill. The whole goal is to find patterns in those tiny price moves and use data, charts, analysis to build a strategy around them.
All right, before you can analyze anything, you need a command center, right? Your trader's dashboard. So, in this next section, we're going to gear you up with the essential tools and the core ideas you have to know before you even think about placing your first trade. First up, you're going to be staring at these a lot. Candlestick charts. Seriously, just think of this as the visual language of the market. Every single one of these little candles tells a story about the fight between buyers and sellers in a given minute or hour or whatever. Learning to read them is absolutely fundamental. Next, we have support and resistance. And honestly, the best way to picture these is as invisible floors and ceilings. Support is a price level, a floor, that the stock has a hard time falling through. Resistance is a ceiling that it struggles to punch above. Finding these levels is how traders spot potential opportunities. And finally, we've got volume. Think of volume as the fuel or the energy behind a price move. If a stock price jumps up, but almost nobody is trading it, well, that's not very convincing, is it? But if a stock breaks through a key ceiling and there's a massive spike in volume, okay, now that tells you there's some serious belief behind that move. So all these ideas, they all come together on your trading platform. This is your toolkit. This is where you'll have your charting tools to draw those floors and ceilings. You'll use technical indicators to get more data. You'll build watch lists of stuff you want to trade. And, super important, you'll use different order types to control exactly how you get in and out of a trade.
Okay, so you've got your dashboard set up. Now, how do you actually play the game? This next part is all about your offense, the different strategies you can use to find trades. But, and this is a big but, we're also going to talk about your defense. And there is one golden rule that protects you when things go wrong. Here's a quick look at some of the most popular strategies. You've got scalping. This is super fast, in and out in seconds, just trying to grab tiny little profits over and over. Then there's momentum trading, which is kind of like surfing. You're just trying to ride a big wave in one direction. Breakout traders wait for the price to smash through one of those floors or ceilings we talked about. And reversal traders, well, they do the opposite. They try to spot a trend that's running out of gas and is ready to turn around. Now listen up, because this is the most important pivot we're going to make. We've been talking about how to make money, but the real secret to staying in this game long term isn't about your winners. It's about your losers. Because I promise you, you are going to have losing trades. Everyone does. This number, this is everything, 1 to 2%. This is the golden rule. It means you never ever risk more than 1 or 2% of your entire account on one single trade. That's it. This rule is what separates a professional from a gambler. This is what makes sure that a few bad trades don't completely blow up your account. And that rule is a huge piece of your psychological armor, because trading is such a mental game. You have to learn to keep your cool. You've got to fight that urge to revenge trade when you have a loss. That feeling of, I got to make it back right now. You just have to stay disciplined and stick to your plan, day in and day out. So after hearing all that, you might be wondering, okay, how do I even start this journey without just setting my money on fire? Well, in our final section, we're going to lay out the exact first steps you should take to get started the smart way and the safe way. Here it is, your 3-step launch plan. Number 1, and this is completely non-negotiable, you start with a demo account. You trade with fake money. It's called paper trading. Number 2, don't try to trade the entire market. Just pick 1 or 2 things and get to know them really, really well. And third, you have to keep a trading journal.
Write down every trade, why you took it, what happened. That's how you learn.
I mean, this chart says it all, doesn't it? Why on earth would you start on the left side with all that risk and emotional pressure when you can start on the right? Paper trading is your flight simulator. It lets you crash and burn 100 times without any real-world consequences. It's where you build your skills without fear.
And that brings us right back to the big question at the heart of it all. After everything we've looked at, the strategy, the analysis, the risk management, the discipline, is day trading some kind of get-rich-quick scheme? Or is it a serious skill that has to be developed, practiced, and mastered over time? I think the answer is pretty clear. The choice, though, is up to you.